on macro discussions. It's a bit different from what I do with Rego because I don't just discuss macro developments in terms of macroeconomics and politics, but also the crypto market and stock markets from a more higher time frame perspective. I think it does help, especially when the price action is quite choppy and it's unclear where the market is going, and to look at it from a more macro perspective and see where we stand in the market. So decided to do this once a week where I share my own ideas and charts, and hopefully you find this helpful. Let me just quickly share my screen. Hope this works. Let's see. All right, I appreciate it, guys. Sounds good. Yeah, I waited for quite a long time to decide. I had a previous version before, but didn't go with that one as I got crucified on my corner. If you remember, I shared it a few months ago, and like the majority of the group disliked it, so couldn't go with that one. All right, let's get going. Obviously, the biggest developments right now and what should be relevant to our market, similar to last week, is stock markets, what's happening with the tariff tensions. So basically, just to cover what's going on right now, we've had the FOMC meeting last week, which was quite dovish, right? We had Powell basically downplaying recession speculations, suggesting that the Fed doesn't see an urge to cut interest rates because the economy is still strong, or at least stronger than anticipated by recession speculators. Then a few hours or a few days after that, we got Trump suggesting that some countries may basically get a pause from tariffs, and that tariffs may be more diluted, right? Selective, so not as aggressive as previously thought by the markets or as feared. And we got all that speculation about tariffs being aggressive and spread across multiple countries. We got all that price action here before anything was actually announced. And then we got a nice buyback after these headlines. This is people getting cautiously optimistic, right? Suggesting that or thinking that tariffs may not be as bad as thought. The reality is that we don't really know, right? We didn't have we have not seen tariffs go live yet. That's something that's planned for April 2nd. It was meant to be at the beginning of March, but they got delayed for a month. And now basically people are speculating whether tariffs are going to be diluted or not. And we got a little reality check last night when Trump put a 25% tariff on all cars that are imported from various countries to the United States. So if you look at the data, the biggest exporters to the United States are Mexico and then the European Union, obviously, which export billions of dollars worth of cars into the United States, and now they have to readjust their prices because they got a 25% tariff on top of that, and that did shake up the markets a bit, right? It was a reality check, and it gave people a signal that tariffs may actually be not as diluted as anticipated or as speculated. That led to this buyback. And after all, at the end of the day, we will need to see, right? I said it many times. It's a bit difficult to predict what's going on because we don't know in what shape and form tariffs will come. We will find out on April 2nd. My belief is that if tariffs come in diluted, we have the worst behind us because we have a massive correction in the last few weeks of 10% for the S&P 500. And if we get something unexpected on April 2nd or even before that, I think the markets can react negatively because markets don't like surprises. And now tariffs going live on April 2nd is no longer a surprise, right? The market expects that. So it does not catch the market off guard. But if there's something else announced that has not been discussed before, that could be a bit problematic. And the problem with that is that these tariffs are being reciprocal, right? So whenever the United States puts a tariff on a country, they usually retaliate and put another tariff back, and that is interpreted as a trading war, right? And in 2018, we had a very similar situation where stock markets dropped by 20%. So we also got a 10% drop back then. Let me actually show it to you. I don't have the TA side of things, but I can show you the price action, and you can judge yourself how similar it is. So basically, this is it. We've got I believe this is it. Yeah, I think this is it. We got I think a 10% drop for the S&P 500. Yeah, more or less a 10%, bit more, maybe like 11, 12% drop for the S&P 500 back then. And we had a very similar context, right? We had tariff tensions rising, people speculating on a recession. Then we got a nice buyback, which I believe led to a very similar growth in stock markets as it did today, 5, 6%, 7%, and then we got another 15% correction, and in total, it was a 20% drop for the S&P 500 on a very, very similar macroeconomic context. Now, of course, there are differences now. Back then, we had, for instance, the Fed hiking interest rates. That is not an option today, right? So when you have recession speculations, it means that people anticipate the economy to slow down. It means that people expect business activity to slow down, right? And when you have the Fed rising interest rates in that context, it means that businesses will face even harsher conditions to borrow money, which will additionally slow down their activity, right? And that's not the case right now. We don't really have a slowing down of business activity. Um, if you look at the earnings reports from different corporations listed in on the S&P 500, it's still positive. They're meeting their revenues, so that this is not really indicative of a slowdown of their activity. And we are not talking about rate hikes. That's a very, very unlikely scenario because rates are already at an all-time high and have been high for 3 years at least. So that is not an option that the market expects. The Fed has been very vocal about rate hikes not being a possibility. So these are a few differences from that period, right? And it makes sense that when when you don't fear business activity to slow down, for stock markets not to drop 20% as in 2018. So that's a very, very big difference that need to be considered, because basically stock markets dropping 20% is people repricing the value of stocks, right? And why would they need to reprice the value of stocks when the performance of these corporations is the same as it was when the S&P 500 was in an uptrend, right? So there's not a fundamental need to further reprice these stock values, and this is not based on a fundamental need to reprice. This is simply fear about a recession, but this is not actually backed up by data. Um, if you look at GDP growth, for instance, it was above expectations today, came in at 2.4%, above the expectations of 2.3%. So the US economy is still doing good. Corporations are doing good. Now, of course, there are a few measures that can be indicative of a slowdown, but we expect a slowdown, right? What would you expect when interest rates are high for 3 years? It basically means that if you own a business and you want to borrow money for investment purposes, you have to pay significantly more interest rates than 3 years ago, right? So it makes it less lucrative for people to actually borrow money. So we do expect some slowdown, but what will matter, in my view, is if these expectations will be met or not in the next few months, and that will significantly influence stock markets. So I hope this makes sense from a macroeconomic perspective, and you understand that what context we are in right now. From a TA perspective, I think we're seeing very very clean price action. And what I mean with that is that we got this sharp sell-off, and we got the 3-day oversold RSI daily as well, but 3-day as well. And now we got a reclaim of this 5,650, 5,700 area. We went above it, almost touched 5,800. but then we got new headlines about tariffs, which brought the SPX index down to this area. And this is the first time this is being retested, right? And this will matter a lot because the correlation between stock markets and crypto is basically one to one, right? Crypto is dropping when stocks are dropping, and crypto is rising when stocks are rising. So this is very important, and this is also why I discuss this chart mostly. And so the S&P 500 and Bitcoin to me are the most important charts. Now, I have a bullish scenario and a bearish scenario, and this will again depend a lot on what will happen on April 2nd and before that. The bearish scenario would be losing this area here and doing something like this, and then it would look a lot like that 2018 price action, right? And then we could even speculate that we could get a retest of 5,400, but really ideally 5,200 would be a big level on a macro. And that wouldn't even be a 20% drop. I think that would be like 15%. So a 20% drop would be roughly at about 5,900. But again, this is very, very difficult for me to imagine right now, because of the reasons I mentioned earlier. But yeah, we got to be prepared for any scenario, right? The last thing that you want to see is basically be surprised by the market and not understand the key levels and the triggers and invalidations. So it's important to discuss all levels. But yeah, this would be my bearish scenario. I think if this happens, we will see new lows on Bitcoin. And with new lows, I mean new local lows, right? I don't mean like drop below 15K or something like that. Am I correct? You're not taking any risk right now. Well, I've been a bit more conservative, MAA plus, in the last few months. So, for instance, what I mean with that is that I've only played the macro levels. I've sold a considerable amount of my allocations in December, some in January. I've talked about it in my corner. And whenever I have bought something back, I was quite aggressive in taking profits and didn't consider anything a really mid to long term position, and rightfully so, right? I think that got proven correct because we got a nice drop from Bitcoin and the rest of the market. But yeah, I mean, my risk aversion is I'm not really taking much risks, to be honest. Like I'm barely trading on leverage, only take leverage trades on big areas that I think can serve as either support or resistance, but I'm not like 100% allocated to the market. That's correct. When we got this drop here, when Bitcoin dropped to 76K, and we got that 950 billion area for total too. I'll cover that in a bit. And that's where I allocated a bit more because I thought that was a good opportunity. We had some 3-day RSI resets, like Solana, for instance, was oversold on the 3-day. So that was a big area for me to add some to risk a bit. Luckily, that held. Although the sentiment was quite bearish, but yeah, that's usually the time where you want to buy, right? Not when everybody's foaming. You buy every 3-day RSI. I started to understand. I mean, you don't get the 3-day RSI reset every day, right? Like for Solana, for instance, we got it a few weeks ago, and the last time before that was, I believe, somewhere around bear market lows. So that's like what, 2 years ago, right? So three days is actually a big signal to buy. So bigger than that would just be a 1 week oversold RSI, which I think we will get at some point in the next few months. But for now, let's not discuss that. That's just future plans. So yeah, not as risk off. I've taken some off yesterday because I got some levels, resistance areas that got reached. I will discuss them in a bit. But I still have exposure from these lows, like 50-50. I sold 50% of my positions yesterday, and want to keep 50% for a change of trend that I will discuss in a bit. So this would be for the S&P 500 my bearish scenario. I would give this a, let's say, I don't want to give fixed numbers because it depends a lot on what Trump will do. But as of now, as things stand, maybe a 30% probability, and the bullish scenario maybe a 60 to 70% probability. And this would be my bullish scenario: reclaim 5,900. and then target the previous all-time or the current all-time high area. And obviously, for a new uptrend, we would need this reclaim here. So this is what I'm looking at. Daily chart. I don't need the choppiness in between. I'm just looking at these levels. I understand the triggers. If we lose this level, I would potentially look to de-risk my positions that I bought a bit lower. And if you get to this area here, I might take some profits based on where we stand with the crypto market. But this is just midterm discussions, right? I mean, ideally, if you're a long-term investor, you would hope that we would get something like 2018, right? Like, why wouldn't you want a 15 or 20% drop from the S&P 500? I mean, these are the best buying opportunities you can get, right? And if it wasn't for the COVID-19 crash in 2018, this would have been an even bigger buying opportunity. I mean, look at this. Look at the buyback. Like if you get a 20% drop, doesn't matter if you're buying stocks or crypto. Look at the buyback, right? Like 20% correction got met. Okay, trading you bugging got met with let's go. All right, 44% increase. And this was obviously an extraordinary event, right? So, I mean, as I've said it when we got this drop for the S&P 500 a few days ago, here we got a 3-day oversold area. I said, I mean, I'm as excited as it can get, right? Because if you have a long-term vision and you're not afraid of this lower time frame chop, or you're not over leveraging positions, these are great opportunities. I mean, and if Trump actually is super serious about tariffs and doesn't just see them as bargaining chips, and we get a drop from the S&P 500 because let's say we get a slowing economy, performance of publicly listed corporations starts declining, and people start repricing stock prices, and we get something like this. I don't know, man. I mean, I live for these days, you know what I mean. This is usually when you make these long-term investments, and where we buy comfortably. And now, of course, there will be many altcoins that will not survive a 20% drop, or at least when I say not survive, they would probably end up very, very far from their all-time high and not make it back. But if you invest in something like Bitcoin or Solana, let's say even Ethereum, right? I mean, I'm not the biggest fan of Ethereum, but it's still a major. I think these would be big opportunities, just like this was a big opportunity, right? I mean, as I said, we got a 3-day oversold RSI. So let me just check a few questions. What do you usually do when the market is like it is now and you're not exposed? I've been taking some scalps successfully, but I'm looking to start positioning on some coins to hold a couple of weeks, maybe 2 months. I don't think it makes sense to wait for daily RSI oversold. I don't think it makes much sense to wait for the daily RSI oversold because we already got it, right? And as long as we don't have an overbought area for the daily RSI, we can still speculate that it might reach that in the next few weeks without getting oversold on the daily again. So I'll get to that in a bit when I discuss indexes, and I'll show you what I would personally do if I would be sidelined. Turn off the magnet on the toolbar on the left side and you'll get a smooth. Oh, if this works, man, I owe you something. You mean this one? Oh man, where have you been before? This was so easy. Oh wow, man, this is life changing. This has been so annoying for months, and I've never really thought about it. Thank you for that one. I owe you something. Relief. Don't Hurt Me bought at 3,810. Yeah, I'll get to ETH in a bit, and I'll show you what I would do. MAA. All right, so this is it from stock markets. This is my plan. I think it's very clear. Let's see what Trump has in his pocket on April 2nd or before that. What we obviously don't want to see is more headlines about tariffs and European countries or Japan or China putting tariffs on the US, because that would just be interpreted as a trade war. But I think it makes a lot of sense to just look at the big levels because they're usually well respected. Oh yeah, I'll get you a port review. I'm very late on that still, Knox, but I haven't really had some time on reviewing portfolios. But I'll promise you that one this week. Okay, so when it comes to majors, this is a macro stream, so I won't really go into altcoins as per usual. So I'll just discuss Bitcoin and Ethereum on a higher time frame. I think it's very clear what's happening, right? We've got a range between 90K and the previous all-time high area, which hasn't been retested yet, so it's not range lows yet. If we would get something like this at some point, maybe we can consider this as a range. But as of now, we can consider these as two areas of interest. If we zoom in a bit on BTC, we can clearly see that it is trying to break above this diagonal trend line, which would be quite a big risk on signal. And we're currently seeing a quick buyback on every little lower time frame dip, right? So there is a bit of a FOMO in the market. People seem to be sidelined, so they're trying to take advantage of every dip that is given. You can see a very speedy buyback. So I'm monitoring this potential breakout here, but ideally I would want a reclaim of this zone. If you look at the horizontal support or resistance areas, this is the previous range lows and obviously a very important level that needs to be reclaimed before considering higher levels. So this is what I personally got on Bitcoin, the 4-hour RSI holding above the 50 area. This is also very important. But if you look at the daily RSI, it is at 50 right now. So if it successfully reclaims this 50 area and finds acceptance above it, I think that would be quite a big risk on signal, especially if we get a little push from stock markets and we end up not breaking down below that area that got reclaimed at 5,700. So this reclaim here and Bitcoin, the daily RSI accepting above this 50 area, and I think it is it is quite likely that we get to an overbought zone at some point in the next few weeks for Bitcoin. But these are my triggers, and especially this reclaim here. As long as this is not reclaimed, for me it is still closer to a resistance area than to a macro support area. And on a lower time frame, I think, as many others, I would consider this zone here between 85 and 84 for a long, if given. And if this is lost, then I would go more risk off because it would mean that it's breaking down, and then potentially we could even target this zone here. But it will depend a lot on stock markets. But this is what I personally got right now. Can you explain a bit further how to play a reclaim on the RSI, perhaps with some examples? Yeah. So here, for instance, what I would do is that I have the daily RSI at 51, 52, but we don't just rely on the RSI, right? That's just confluence. So we also identify a resistance area on the price level, and that's for me is 90 to 91, 92K. So if let's say we get this reclaim, let me draw this. We get this reclaim here and we break out maybe to like 95, then I would look for a retest at this zone. And if this comes with a retest of the 50 area on the RSI, I think we have a very valid zone to bid with a very easy invalidation, which would be the daily RSI breaking below 50 and the price also breaking below the 90K area. So this is how I would play it. I personally don't long these reclaims. This is not my style. I think Tariq is a very very competent trader when it comes to immediately longing reclaims. But that's not me. I don't trade on such a lower time frame, but on a higher time frame, this is how I would personally treat it. And the thing is that we want to identify zones for buying where the invalidation is very easy, right? You could be buying here and anticipate a breakout, but what's the RR? I mean, for me, I mean, you could say, yeah, this is maybe the invalidation, but for me, that's still too wide. I think the invalidation here would be way easier. So I always look at things from an RR perspective, and that's how I like to present them. When an index or BTC broke a resistance, what time frame you look for a retest and buy for spot buying? And can you show us draw this, support and resistance? They're too precise. Yeah, I'll give you an example in just a bit. Uh, just to get to Ethereum, because MAA talked about it in a bit. For Ethereum, it's very simple, guys. Very simple on a higher time frame. I'll get to it in a bit in a lower time frame as well. But this is a big zone of interest at 2,150. For me, this is resistance. If this gets reclaimed on the daily and you get a clear break above this, say we pump all the way to 2,300, 2,400, and we get a retest of this zone, I would buy more spot and bring your average entry down from 3,800 to, I mean, depending on how much you buy, but significantly down, right? Because 3,800 is obviously not a good entry. Ideally, you shouldn't have kept this one, right? You should have had a tighter invalidation. But if you can bring your average down, I would do it this way. So wait for this reclaim. This is a historically big area. Look at this here, look at this wick. So if you get a reclaim, you have confluence that this is the low for Ethereum, and you can add to your bag with a very easy invalidation. If why I wouldn't buy here personally is because we don't have a change of structure yet. This is still a downtrend for Ethereum, right? How can, I mean, nobody can call this an uptrend or a change of trend, right? So this would be more indicative of a change of trend. But if I buy here, I could potentially buy very close to a bearish retest, to a lower high on Ethereum, right? So yes, it would bring down my average entry, but the risk of this making new lows is also higher, right? So here I think you can buy more comfortably, knowing that at this point maybe even Bitcoin broke above that 90K area, and Ethereum gives you a signal of a change of trend. And then if you buy here, you don't have to wait for a pump all the way to 3,800 to get to break even, but potentially 2,600, 2,700, depending on how much you buy. So this is how I would treat Ethereum on a higher time frame. On a lower time frame, say the 4 hour, oops. Uh, I mean, the 4 hour RSI is trapped below the 50 area, which is why I would be a bit hesitant to long Ethereum right now. I got a zone of interest at 1,910 to 1,900. If we actually get a confirmation of this 4 hour RSI breakdown, and if we get a 4 hour RSI reset, ideally with something like this, like a bullish divergence, then I would be looking to long it at 1,910. Will we get that? We'll see. We got a group of POCs here at 1,900 that is keeping the price up. But if we get a breakdown and if we want a very comfortable zone to long this or to buy this, this would be it. Not sure if we get it, but judging from the 4 hour RSI, it is a zone that would make sense, especially if we get the 4 hour RSI at an oversold area, which is usually my biggest trigger for buying or longing. I mean, you can use a 1 hour or 30 minute. There are people that use 15 minute bull divs or bear divs to trade. That's not my approach. I like to have the 4 hour RSI reset, and then I'm more comfortable in buying. I'll give you another example with Solana, for instance. It had a nice 4 hour bear div the other day here. If you look at this, very clean. Very clean. And now same situation here. The 4 hour RSI struggling to get above 50. Ideally, I would want a 4 hour RSI reset, get something like a bullish divergence here, and potentially long somewhere around these POCs. I mean, we got levels of interest at starting from 131 to 124. I think that's a very, very good zone if you get it in confluence with a 4-hour RSI reset. Um, is this too greedy? Might be. It will depend on Bitcoin. It will depend on stock markets. But I mean, long for me here after it just gave us a 4-hour bear div, and which is not complete yet. It's a bit risky for me. So my ideal scenario would be here, and very similar to Ethereum. So that's what I would personally do for both examples. Uh, could you could you think to hedge my position on 3,810? What do you mean with that? If you can elaborate. Can you go over Tesla? Sold some from buying around 2030 today. Looking to re-edge. Just curious what you. Yeah, I'll cover it in a bit. I just have to cover a few indexes. How do you get POCs visible so fast? Is it because of your settings? Honestly, no idea. This is the way it worked when I since I installed it. So yeah, I'm using Pocket Strat. I think if you're not using that, you can download it and then you can easily integrate it into TradingView. I don't use POCs that much because I don't trade the lower time frame price action as much. But yeah, when it comes to like 4-hour charts and RSI levels, then I use these for confluence, of course. And if I see something like a boulder forming around a POC cluster, it's obviously additional confluence. Go short and try compensate this bad investment. I mean, where would you want to go short? As I said, maybe around these areas here, which is a macro support, macro resistance area. Here you could look for a bear div that could form if you have the right triggers. Then yeah, you could look for a short. But here, I'm usually not the type of trader because there are people that do this. Like John is very successful in this. He looks for a breakdown and the price is already down and he shorts that, right? I like to short pops. So if we get to a big POC cluster and we got the RSI confluence, then I usually look for short setups. But like here, it's a bit risky to just short, right? You never short a boring market. I'm not going into buy zones right now because this is my macro stream. I just wanted to use Bitcoin, Ethereum, and Sol for some examples. But I'll show you based on my indexes now where I would be buying altcoins and where I would be selling them. But if I have time at the end, we can look at it. No problem, Irish. Or you can tag me on the fundamentals and we can look at it. All right, let's get going. Wow, already 35 minutes gone. So got still a lot of room, a lot of things to cover. Okay, so let me get rid of this POCs. It's a bit confusing. I think total three and others are very, very good charts to understand where we stand in the market. So, all right, I didn't catch total three for us because I was focused on total two and others. And if you remember correctly, we got 950 billion for total two and 200 billion for others. But when we got these retests, we also got a nice retest for total three at 900 and 710 billion. And I'll use this one for now as an example, just to understand where we stand with altcoins in the market. So if you have been buying this here, somewhere around here, you're in a very comfortable position to wait for a change of trend. To me, we haven't seen a change of trend yet for altcoins or altcoin indexes, right? We said that 850 billion is a resistance area for total three. So if we get closer to this area, the RR for new positions into altcoins is not as good, right? So I wouldn't be entering altcoins here um, planning to have a swing trade, right? So scalping is possible, especially given the nice volatility that we're having in the market. There's nothing wrong with that. But for a swing position, I wouldn't be buying here. I usually like to buy these macro resistance zones. So what I would be doing here, and I think Modok asked me about this, right? What I would do here is I would either wait for a reclaim of this zone here, and then you can target this area here at 940, 950 billion. Or I would wait for a breakdown. So we actually get a rejection from the zone and we get a breakdown, potentially print something like a higher low and then buy based on the RSI. So if you get the 4 hour RSI, for instance, for total three at an oversold zone, then I would be looking for buys. But here it's a bit problematic for me. I mean, you can try it and speculate on a reclaim, but the risk is too high, right? So you want to buy spot if you're sidelined when everything is dropping, not when everything is rising. And of course, I understand that there can be some FOMO. If you didn't buy here, you were too afraid. You should be more afraid to buy here, right? That's the right psychology. You shouldn't be comfortable buying here because you're feeling FOMO. Because here you could end up buying below a resistance area, below an area, guys, and I can't believe how easily I can draw now. Below an area that can be another lower high, right? Which can be a bearish retest. So you need to have this confirmation that we're changing the structure and potentially going for a higher high. And that's why I wouldn't be buying here. So I would wait for something like this, but on a higher time frame. Let's face it, if this downtrend structure is not broken, hmm, I mean, this would be again a good area. And if this doesn't hold, what guarantees us that we won't get another lower low at some point if the downtrend is not broken? Right? So yeah, if this is actually a bearish retest and this is like a relief rally from heavily oversold areas and not an uptrend, a confirmation, a confirmed uptrend, that what guarantees us that we won't get another retest here and just a continuation of this downtrend? So that's why I'm saying you either buy here or you wait for a reclaim of this area, and then your invalidation would basically be breaking down below this area again. What do we got on the chat? Okay, I'll mute you, 2P. Get out of here. Should just hold another 4 months. Yo, man, that entry on Ethereum. I mean, I don't need to tell you. Let me give you another example to answer Modok's question even better. Others, there's no better index in this market to understand when to buy altcoins than others. None. Not Bitcoin, not Ethereum, not ETH BTC, not USDT dominance. Most of you guys trade all altcoins just like me, right? Let's face it. We like the risky stuff. We're not so much into the boring stock markets and Bitcoin and Ethereum, which we also trade, but altcoins are the focus of the majority of the group, right? Here again, clear downtrend, lower high, lower high, lower high, lower high. What is this to you? I mean, if you have an alternative explanation, I want to hear it. But this is for me a lower high now. As long as this index trades below this resistance area, this is a lower high. This is a bearish retest. Now, if you buy 3% below this area, that can be a lower high. What is your RR? It's not that good. And I'm just talking about spot position. I'm not talking about trading, right? Because there are alts that are giving 10% moves in the market that you can easily scalp, and that's really, really nice. But if you sideline and you want to buy a spot, what are you looking for here? You're looking for a change of trend, right? So this is exactly how I would play it. Say we break this zone, go all the way to 285, 280 billion, get a rejection, then I would be buying this. And here I would speculate on a higher low. Here I would be speculating on a higher low. And then you're buying knowing that this is a change or potentially a change of structure. And then what you would be looking at is a reclaim of this zone here, and then you have a confirmed uptrend. But here, for me, the risk is still too high to buy because, as you know, if you have been following my corner, you know that we bought at 200 billion, right? We bought here, and the index has increased by 25%. This was like 30, 40, 50% moves on altcoins. Be that Ondo, Sui, Pepe, Tau, it doesn't matter, right? So what I would do here, as I said, reclaim this area and we can shoot for 280 billion, which would be another 20, 30% move on altcoins. Or you anticipate a higher low being printed on this 220 billion area, 225, give or take, doesn't really matter. And here your invalidation is really easy because start breaking below here, and you basically know that this is a continuation of the downtrend, and you'll test this area at 180 billion, which didn't get tested. If this gets retested, now I said I took out 50% of my positions that I took from here and sold them here. Very happy with the profits. I don't care if half of my bags um, go high or not, right? I protect myself in the case that this is just a continuation of the downtrend and a bearish retest. If it's not, if we get a change of trend, I'm still in 50% of my bags. But I'm personally not willing to add more unless I get a change of structure here. I could potentially try some stuff here. And if we get to this zone, it would mean that most of my positions would get stopped out break even. But I know that I took 50% off here and I protected myself in case that this is just the continuation of a downtrend. You know what I mean? This is my personal system. This is not the only way this works, right? There are thousands of ways this works. That's why we have several traders in this group who all offer insights into their systems, which work for them, and that's fine. Just because this works for me doesn't mean it works for anyone else, or it can work. And if it does work, then I'm happy with it, and you can ask me more questions. But this is how I personally see it. This is how I've been navigating the market in the last few months, and this was very successful for me. So I think this is very clear what we expect from the market right now. Let me just check a few questions. Would you set limit orders at 220 billion or want to see lower time frame bullish structure first and more good? Well, I got a few orders right now, not a lot. And what I usually do, MAA, is for instance, I want to buy, let's say I want to buy Tau, right? Tau is at 200 and what, 65. I identify a few zones of interest where I would be willing to buy if I get the right triggers. And it goes to my first zone, but I don't have others in my buy area, or I don't have RSI confluence, right? I just skip it. I move to the second zone. If it drops to the second zone, and let's say I have others at at my zone here, and I have double confluence from others and from Tau and the RSI, then I'm willing to take it and risk it. Say I have a 5% stop loss on spot, which is not a lot. And if it gets stopped out because others is moving below this area, losing it, then I will go to my next area of interest for Tau, and hopefully that will align with this area for others, right? So this is how I personally do it. So I do set some limits, but I have more areas of interest, right? That I consider in confluence with others with total two, total three, USDT dominance. So it's a lot of indexes and triggers that I try to use to complement my system. It's not just the individual altcoin that I consider when buying. How about the bags that you are in loss? Would you sell 50% of the given areas? This way you can either increase the amount of coins if you have lower levels, or it's a bit problematic to answer that, right? Because it's very difficult to tell people to sell their bags in a loss, and it depends from case to case. I don't know what you bought. I don't know where you bought. But I think resistance areas apply regardless of what your entry is, right? The market doesn't care what your entry is. if this is a bearish retest, altcoins will locally top here, right? And that is something that you need to consider. Do you want to de-risk at the point where the market can print a lower high, or do you want to speculate that we are changing trend and potentially reach higher levels in the next few weeks and months, and you can de-risk at break even, right? That's a decision that you would need to make for yourself, and so it's very difficult for me to tell you to whether to cut a position in loss or not. Not sure of if somebody already asked, but how do you mark your zones of interest? It's not that complicated. You just need to zoom out. You look at obvious resistance areas, right? Or areas that served as resistance or support for this index. If you look at 200 billion, for instance, we can see many wicks into this area, many attempts of holding above this area, many attempts that were successful. Like here, it's just supply and demand. It's really nothing complicated. I don't really use POCs or anything or fib levels. I don't trade with fibs, for instance. It's just supply and demand, where we see that the price reacted from, and then you draw your boxes based on these areas, and they get respected a lot on a higher time frame, which is why I think this is a very good index when navigating the altcoin market on a higher time frame. DB, what do you use to highlight? No, that I covered that. Am I blind? Oh yeah, that's the same question from results. Okay, I think I just answered that. Modak, no, I mean, what would you do to repair the damage of bags at loss? Not telling to sell bags. Uh, what I told MAA basically, I would try to bring the average entry down. So say you bought Solana at $180. That's your average entry. Whenever you go to a macro support area for Sol or for others and Total 2, I would just add to that bag, bring down the average entry, and basically lower the time you need to wait to get back to break even, right? So say we don't reclaim this area here, and we drop here to make another higher low, and we get a confirmation that this is a change of trend. I would just buy more Sol here, bring down your average entry, and then it doesn't take too long to go back to break even basically. Yeah, I use my eye instead of indicator. Yeah, that's still just for these indexes, right? Because for altcoins or for Bitcoin, I also use RSI Confluence. I use POCs in very rare cases fibs, but not on my day to day. To be honest, I rarely use them. All right, what else do we got? I think we made a pretty good point. I think we discussed this as well last week, but last week we were somewhere around here, right? So we said that if we get to 250 billion, we can take some off and then leave some moon bags or half of your bags, whatever is appropriate for you, and wait for a change of trend if given, and then potentially take some more off at 280 billion. I think there's not much left, to be honest, to discuss. I covered everything I had from the macro side of things, both in the crypto market as well as in stock markets. I think it's very clear what I'm personally looking at. I do think that the market is at a very pivotal area because we could be at a stage where we can see a change of trend for the entire market, not just Bitcoin. So that's something I will be monitoring. But it's also a point where we can just print a lower high, right? So it's very important to understand this because it should reflect on the risk you take. If you feel FOMO now, and if you're fully sidelined, you need to be aware that there's a possibility that you could be buying the local top of altcoins. It is a possibility, and right, I've just explained why I think it is a possibility. I mean, you cannot 100% eliminate that option, right? Because you're still in a downtrend. So that's something that you would need to decide for yourself. If you really feel sidelined, if you think in the next few months we will see a change of trend because stock markets are bottomed, Trump won't be as serious with the tariff headlines, and you can just start buying here and you DCA lower. But are you willing to hold a position that could get underwater? I don't know. I mean, I've been buying here, try to share the zone with the group. I think a lot of people follow and should be in a comfortable position. And as I said, if I get this, and I would say ideally this, I would love this. I mean, why wouldn't we love this, right? I mean, unless you're like fully exposed and you didn't take any profits, I don't see a reason why we wouldn't love this. This would be an even bigger buying opportunity. But not saying that we get it. I think there's a high chance that this is the bottom for now, and we could potentially, worst case, maybe print a higher low here if this is not a reclaim. All right. To what extent do you believe that this business cycle expanding, as you said, cycles? I don't really like to speculate much on where we stand with the cycle. I like to play my levels. Like if I start speculating that yeah we didn't get cycle top in yet, I mean what impression would that leave? Would just ignite more FOMO for people that are sidelined. So I like to play my levels on a macro scale. But I was just actually thinking about one thing today, and that is that the last cycle top was 3.5 years ago, right? And the cycle lows was what? I mean, these lows. This is almost 3.5 years ago. You know, cycles are not endless. That's what I tend to believe. They're not endless, and that's what we need to understand. If we will get another leg up and make new highs, I think it will depend a lot on stock markets. I would say this: if the US manages to avoid a recession, I think it is very likely that we get new highs. If it doesn't manage to avoid a recession, then I think this is the highest we can get this cycle, and then we can look for lower levels in the next few months. But I don't like to make a lot of speculations around that. I tend to follow the market level by level or macro level by macro level. These DXY retracing, S&P 500 retracing, gold pumping, some news to come out. I mean, Hamza, the market is still risk off, right? Precisely because of what I mentioned. Because people don't know what to expect from April 2nd. We got new headlines coming in. What was so interesting, what I really found a very interesting piece of information, oh, we got stock markets dropping again, is that this buyback was mostly retail investors. So this was you and I buying this dip, but not professional asset managers. They kept their exposure low, right? So this tells you that the market is still risk off. There's still a lot of uncertainty in the market. And that can also be seen by the price of gold. That can also be seen by US bonds, right? Which started to increase as well in the last few hours and days since we got new tariff headlines. And this is always a very good measure to understand uncertainty in the market because people move from riskier assets such as the dollar or especially cryptocurrencies to something like gold or US bonds when they expect uncertainty or when they expect something to break in the US economy and US stock markets. So yeah, it could be news coming in. It could be insider trading, expecting more headlines from tariffs to come in. But it's also just a reflection of where we stand in the market. All right, it's almost 5 p.m. for me. Wow, already 55 minutes. I actually planned to have like a 30-minute stream, just cover everything that's important. But you guys were very engaging, and it's always very very helpful when you have questions and comments, even if they're controversial and critical. Don't fear to share them. If you've been on the stream with Rego, you know that we like to debate a lot. We're in many cases not sharing same thoughts, and that's very nice. I think that's was the source of a very engaging stream. So if you have critical comments, always feel free to share them with me. I like to debate with you guys in a very constructive manner. Um, I don't consider myself like knowing everything. I know that there are very wise and reasonable members in this group who can share very insightful comments and questions. So always welcome to that. Thank you guys for joining. Hope this is helpful and stay safe trading. I'll see you guys on Monday on Stream with Impulse. Take care and have a good day.